Welcome everyone to the Policy Assumptions and Transfers webinar today, How and Why. I'm Dolores Glass and Dawn Forrest will be manning the questions box. Our intentions, as we always present Wright flood presentations, are in an effort to communicate NFIP topics and underwriting rules as a convenience to our partners. We apologize if any inadvertent miscommunications result. Defer disputed topics to the NFIP guidelines and the flood manual, the flood insurance policy bulletins, and official statements on the topic. Opinions offered today are Dawn's and my own and represents us and are not representative positions taken by Wright Flood, NFIP, or FEMA. So policy assumptions of the NFIP policies, how and why. Today's webinar, we want to give you a better insight into how you can use the policy assumption capabilities to help your clients. The NFIP policy assumption rules are a little unique among other types of insurance. We're going to cover the reasoning behind that and the why, the how, and the where, the when. Policy assumption is another chance for the agent to show his flood expertise and added value to the property owners and win that client for life. The NFIP has several occasions, like at the time of map change, when the premium subsidies are advantageous, and helping clients understand when to buy that policy to create that sales asset and how to transfer it can become that important advantage to the owner. And it's a win-win for you and the client. So some questions: can all the policies be in the NFIP transferred, and when is it most advantageous? And we're also going to share the Wright flood steps that are involved with transferring that policy and doing the policy assumption. The NFIP policy assumption allows policy transfers from the current owner of the property to the new buyer and future owner of the property. The NFIP allows policy transfer for all policies except course of construction and contents only. Timing is important on the policy assumption or the policy transfer, as the NFIP rules indicate that the assumption can only be done prior to or as part of closing and must include signatures of the current owner dated before or on the date of closing. It's accomplished as an endorsement to change the named insured and modify the policy for the new owner. Printing and submitting the signed endorsement summary by both the buyer and the seller and the agent prior to the date of loan closing provides the documentation for this transaction. Using Wright Flood Agent Portal, the agent of record will modify the policy to meet the needs of the new owner, such as changing the named insured, the primary residence designation, coverage amounts if the lender or the insured need more or less coverage, lender clause to the new owner for make sure that the new lender is represented on this policy. These are all the items that have to be considered from the point of view of the new owner. And an online endorsement transaction can include any or all of these items to be changed, collect the premium that may result if there's a change in the coverages by credit card or EFT from the client, and even include the documentation uploaded as part of the whole transaction. So it's completed all at once. The point of the policy assumption is to pass the existing benefits of this specific active policy to the new owner of the property. The tool is most helpful when there are existing subsidized premiums in place that allow for a slow glide path up to full risk rates. That would be an example, would be newly mapped into the SFHA. Or there also benefit when the policy was initiated prior to the map change, showing an increase in flood zone or base flood elevation on the new map, thereby maintaining the same policy continues any grandfathering or continuous coverage as long as the policy remains in force, or grandfathering built-in compliance with the documentation already verified in the file. And another benefit would be if the property would require documentation for a submit for rate rating. So that has already been completed on the active policy, and when transferred, all that documentation becomes part of the new owner's file as well. So you can't transfer or assign a new owner for policies in course of construction or contents only, as I've said, probably will say a few more times. Also, there are other policies like preferred risk policies that remain in the low-risk flood zone that are not usually transferred, as it is just as easy to requote the preferred risk policy than it would be to go through the transfer transaction. So let's think of some examples. If the low-risk property moves into a high-risk flood zone as a result of map change, then the newly mapped policy is eligible for purchase the first year after map revision. Later, when the property is sold, that owner has a sales asset in that lower premium policy that doesn't require an immediate need for an elevation certificate and that can be transferred to that new owner. His competition might not have this. In fact, others affected by the map change may be required to get an elevation certificate and be rated with the map currently in place that shows the higher risk flood zone. With the transferred policy, eventually there will be a need to purchase that elevation certificate, but it's not urgent at the time when the property is changing hands. Another example is if the map change moves the property from high-risk AE zone to an even higher risk VE zone, or if the base flood elevation is increased, and that policy can be grandfathered to use the older AE zone or the lower base flood elevation, again, which is an advantage, showing lower premium than using the current base flood elevation on the flood map. And that becomes another opportunity for the seller to create a sales asset when that gets transferred to the new owner of the property. As we said, every policy is available for policy assumption or transfer, but some are really advantageous. And here's a table to help simplify those. What the agent would do is search the declaration page for some specifics that might indicate when a policy assumption is really that opportunity. So you would find on the declaration page if the product type is newly mapped. This product cannot be purchased once the one-year eligibility period expires. So it becomes that great asset to the seller. Again, on the declaration page, if the grandfather status says yes, then the justification for the grandfathering is in the file, and therefore less work for that buyer, less complications, and an easier sale for the seller. And on the declaration page, if the elevation difference is provided, this would indicate that an elevation certificate has been verified, or it could mean that even more, that a submit for rate rating has been completed. And all of that gets transferred in so much less complicated for buyer and for agent, so that that becomes the selling asset or the advantage to the seller. Policy assumption allows the agent the chance to prove his value and the value of flood insurance to his clients. Even when selling a flood policy or changing an existing one, sell using the policy assumption opportunity to add value to your client. At the time of map change, the agent can use policy assumption talking points, thereby alerting owners that they may create this selling advantage for that one-year period of time only. Agent efforts during map change can increase the number of insured survivors in his community and build resilience if a flood event occurred. So we hope that you're all participating in FEMA's moonshot goals to double the number of policies in force before 2023. And using policy assumption as an advantage is a way to do that. In the time of map change in their sales area, agents can reach out to existing clients that are not yet covered by flood insurance to sell that newly mapped. To real estate agents, you can reach out to the new real estate agents in the area that was just remapped and alert them of what the solutions might be. And to the lenders in your community, alerting them that the NFIP does have options for owners when the flood map changes, putting the property in a higher risk zone. So when the maps change, the agent wants to share the message that purchasing that flood policy before the new map may mean a lower cost initially and become that sales asset to be passed to any future buyer. And policy assumption allows everyone in that transaction to benefit. If agents stay involved and participate in map change meetings in their community, then they can spread the word about policy assumption. As owners are concerned about the new cost of a flood policy, agents can respond with the lower cost newly mapped procedure or the grandfathering options. And these can help owners that are now required to purchase flood insurance to find ways to get that flood coverage they're required to buy, but to pay less. And for those moving to lower risk, agents can help owners understand that lower risk does not mean zero risk. So if they have a policy and they move to the low risk zone, they can retain that policy as a preferred risk policy, perhaps even get a refund, even if the lender requirement to purchase is lifted. Insured flood victims recover faster and more completely. The more insured survivors, the faster the whole community can recover after a flood event. Do we have any questions yet, Dawn?
We actually have a couple of questions. Thank you, Dolores. The first one is, where did it go? How do we know when map changes are going to be taking place in our area?
When the community is going through this process, there are many times when they will announce that the maps are available for people to be able to look at it. So it's going to be something that comes from your community. It may also come from FEMA. There is a spot on the wrightfloodadvice.org, which is a new website that Wright Flood has put in place. Let me say it again, wrightfloodadvice.org, where they have a spot there where you can look at all the map changes that are upcoming for that month. And you want to look at that to be sure that they're maps that are, whether they're in open for review or whether they're actually at the point where they're being enacted. And again, that's something you're going to see in the newspaper as they invite the citizens to come and view those maps.
Okay, good. And I have another question that kind of goes about that. An agent is asking to clarify, saying, so a policy is only eligible for policy assumption if there is a map change in the area of that policy location?
Oh, no. A policy within the NFIP is eligible for policy transfer or assumption unless it's a cost of in course of construction or contents only policy at any time. The point that I was making with the map changes is that when the maps change is exactly the time when purchase of that flood policy becomes the sales asset, because it can only be in some cases, in the case of the newly mapped, moving from low risk to high risk, it can only be moved from owner to owner, and you can only purchase it within the first year. Then after that, you only get the regular rates after that. You don't get the newly mapped rates. Those newly mapped rates being lower are the advantage that would make the actual transfer of that policy so helpful to both the buyer and the seller. So you can do it anytime.
Yes, very good. And the next question is, we can only transfer another Wright flood policy. So I guess needing clarification about, if it's a Wright flood policy already, then the transfer would be within Wright flood. Not
yes.
To another Write Your Own.
Normally, that's the convenience of it, is what happens if it's a Wright flood policy, then you would transfer it to a new owner and the policy stays in force, so it stays with Wright flood. Considerations when the company that is holding the policy has members assigned and the new buyer is not in the same ability to be a member as the old buyer was, the old owner. In that case, there are some ways that the company can move the policy from another carrier to Wright Flood or whatever as part of the policy transfer. So it can happen. It's just most conveniently happens within the same carrier because you're keeping the same policy in place.
Right. And so that was the next question for clarification, was just asking that if the agent of record that's on the policy being transferred is, you know, somebody else, but you know, the current agent of record that wants to, you know, take over that policy after it's assumed by the new owners, can that happen? And, you know, as long as you're writing with Wright Flood and it's a Wright Flood policy, that's true.
Yes, what would happen is that we normally ask the agent of record to participate in this transaction. So if a different agent wants to become the agent of record on this policy, they can become the agent of record by getting the signature of the current insured on the policy. As long as it's a Wright Flood policy and they're a Wright Flood agent, they would become the agent of record on that policy, and then they would participate in the transfer or assumption from the policy from one owner to the other owner. But normally the agent of record on the policy is going to agree to become the agent, you know, for the new owner, and that's when that transaction becomes the easiest to complete.
Okay, very good. Okay, I think
Is that it?
That's all we have right now,
Okay.
Yes.
So let's hear a little bit more. What are the steps to initiate policy assumption? Let's talk about how the policy assumption opportunity begins. From the agent's point of view, either his client on the policy right now, the seller of the property, or his client's buyer is going to get in contact with the agent of record that's on the existing policy to begin. Usually that agent will agree to do the transaction when they're contacted. And if that agent of record can't participate for some reason within that agency, then they will find an alternate. The owner or the buyer of the policy finds an alternate Wright Flood agent that will be willing to assist or direct the insured to Wright Flood, where Wright Flood would find an additional Wright Flood agent that's willing to participate. So as that last question indicated, if you're the agent that wants to become the agent on that policy and the buyer and the seller are all in agreement for that, then that step has been completed there. So you could either be the agent of record that's already on the policy, or you could be that alternate agent requested to assist in the policy transfer. So you want to be sure also, as you're initiating the policy assumption transaction, that the lender who's on the policy, the lender who's going to be for the new owner of the policy agrees to accept a partial year policy at settlement. And also they're going to make adjustments to the lender clause. So they're going to set the escrow account accordingly and confirm that the lender clause, what the lender clause would be that they need to add. You're also going to confirm that the timing is right for this transaction, because policy assumption transactions are usually completed when the property changes hands. The signatures of all insureds on the policy, that would be the buyers and the agent, on the endorsement, have to be placed on the endorsement summary page when the transaction is done. So we need the new owners, we need the old owners, and we need the agent to sign that endorsement summary or an accord endorsement form to be sent into Wright Flood. And those dates are very important on that because they have to be dated before the transaction takes place, before the actual loan closing, before the property changes hands. Buyer and seller can privately negotiate what reimbursement, if any, is due to the seller for the remaining unused part of the fully paid flood policy. Because the current owner has paid for a full year's coverage, and if he moves it to a new owner, there could potentially be some reimbursement decided between the two parties. So here's what the agent portal endorsement tools would look like. To begin, you would search for the policy. Down the left-hand menu, find policy maintenance once you're inside the policy, where you see all the transactions that can be done after new business on the agent portal. So if the new business is in effect, the policy is in effect and active, you want to make any changes on that policy, you're going to use the policy maintenance tab that's down the left. That's on the agent portal. You're going to select endorsement, because as you open up the policy maintenance, you can see from the screen here that you can do policy payment, cancellation, endorsement, lender change, or request a declaration page be mailed. Okay, so you're going to select endorsement and begin the transaction. Once you do that, it's going to take you through all the sections of the endorsement that may need to be modified. And you can make those modifications on all the sections together. And you can also hit next to continue if that modification is not one that you need to make a change for. You can find all the modifications you need. And you're going to complete the endorsement transaction on the website under policy maintenance. You're going to modify the primary residence. You're going to change the named insured. You're going to check the coverage amount for both the building and contents. If they're making an increase in the amount of coverage, then there will be an opportunity for additional premium to be collected there using the insured's credit card or EFT. You could change the lender clause. And then eventually, when you're done all of the transactions that would be considered for a policy assumption, then you would print the endorsement summary. And that's the page where you would collect the dated signatures of the current owner and the new buyer. You're going to print that. You're going to get the current dates on it and signatures, and then you're going to upload that as the endorsement document to cover the transaction, to be the underwriting for the transaction. And also, if the insured is a different primary residence, if they are the primary resident of the property, they would need to sign a primary resident endorsement, verification form. So they're going to state that they're going to be the primary resident more than 50% of the time in the upcoming year. All of those two documents, the one with the signatures and the one with the primary resident verification, those get uploaded with the policy transaction. And then you're going to print the revised declaration page, because when you do these endorsements on the Wright Flood to change the Wright Flood agent portal, to change all these things on the declaration page and on the policy, you're going to be able to get that revised declaration page for the buyer to take to loan closing and to be sent to the closing table, whatever. You can email it or you can print it and provide it to the new owner. Now, just to make you aware, on the WrightFlood.com website, there is a link titled Assume Policy. This link is directed to real estate agents or to others who have no way of connecting to the Wright Flood insurance agent on the existing policy that they would like to assume. It is not intended for Wright Flood agents, because Wright Flood agents have enhanced tools on the agent portal to make this process easier. So we don't recommend that Wright Flood agents direct clients to go to this link. There is a form available, however, on this Assume Policy link, if you're looking for a form, that can help agents organize the signatures that are required to do the policy transaction. So if you choose to use that form as part of your endorsement transaction, that's possible too. And we put the form in our resources page today from Assume Policy link that can be helpful if that's what you would like to do. All right, let's look at the summary here today. So the ability to transfer or assume a policy from seller to buyer is unique and helpful in the NFIP and can save time and rating efforts and possibly even some premium for both parties. It's a great tool to share with your clients when they have a newly mapped policy or a grandfathered policy, when the maps change, or when the policy is a submit for rate, that active policy that they purchased can be transferred to a new buyer, making the transaction easier, and the agent will be the hero. Just remember, when assisting with the transfer, that it must be accomplished at loan closing or property transfer, and that the name of the insureds, the lender, the primary residence, and the coverages should be reviewed with the new buyer to be sure that the policy serves their needs. All signatures of the named insured, the seller, the buyer, and the agent must be submitted and dated before the date of loan closing. An assumable NFIP policy can become that selling asset if purchased within eligibility, and that may not be available to future policyholders. You, as the knowledgeable, well-trained agent, make the difference. Today we have a list of the resources that are under the handouts that we just talked about. Where to find the map changes by state, steps by the AOR to assist, agent tips and talking points about map changes, about grandfathering. There's the easy policy assumption form that I mentioned to you, and the FEMA fact sheet, Are You at Risk, to give to your policyholders. So if you don't get a chance to download from the handouts or your equipment doesn't allow you to do that, you can certainly go to our agent portal, to the bulletin board, and the search words policy assumptions should bring up our page. So, Dawn, we're open for more questions.
Okay, and I do have a couple, and I wanted to also point out that in that handout that you had created a screenshot of what to do, like for where to find that endorsement for that name change, and how to process that transfer.
Great.
Now we do have a question asking, saying, are assumption of policies only available on residential properties, or is it available for commercial properties as well?
No, it is definitely available for commercial properties, and it is often used by business owners to, to transfer to the new owner of their property. So yes, it can be residential or commercial.
Okay, very good. And then another question was, how many times can a policy be transferred? Meaning, if the policy transfers from A to B, can it then later be B to C and the new customer, etc.?
To me, that the logic of what they're doing would indicate that you can't pass it again and again. Once it becomes one person's policy, and then it moves to the second person's policy, there's really no markers on it that would indicate it can't be transferred again.
Absolutely, because those benefits, continue to follow. We have a question that says, is a signature from the lender required for the assumption to take place?
What really has to happen is the lender has to agree that they're going to accept a policy at loan closing that's not going to be a 12-month policy. Some are particular as to how many months it is that it's in place. One of the reasons that they need to be aware and agree is because they're going to adjust the escrow account. So when you go to settlement and you have a new policy, 1/12 of the cost of that policy is included in your monthly mortgage payment, so that there's enough in escrow to pay that premium when it comes up the next year. Well, if there's only 4 months or 5 months left, they're going to have to put additional money into that monthly payment on the escrow account to make sure that when 5 months is up, when the policy expires, that they have the full premium available for to purchase that next 12-month policy. So the lender does have to make some different considerations. It really is something that they need to be aware of. The signature really is just, my understanding is that it's not required, but it's just to help everyone be aware that the lender agrees. We don't want to go through the policy transfer and then find out the lender objects.
Or I guess if the seller had a claim, how does it affect?
That's a really good question, and I'm not sure that would be the time to transfer that policy, truthfully.
Hey, Dolores, it's Ashley.
Hey, Ashley, I didn't know you were with us today.
Yeah.
There you are. You got my back.
Yay. I do, of course. So if there is an open claim, we do not absolutely want to do that assumption. And we will certainly work with the seller and the buyer on handling a new application and processing with the grandfathering or newly mapped and whatever we can with the policy transfer into a new policy that is completely separate and independent for this new owner. And that is definitely the best case scenario to include us in that process and let us help you through that transition. And you are correct. We want to keep that policy live and open and in the correct, the claimant's name, because once the claim gets settled, we want a check to go to the right person, and that would be the seller and not the buyer. Right. So very, very important information. Also, just wanted to add in for you the when we're doing the assumptions that are coming from other companies to us, it's really important, again, that you are doing multiple things at that particular point in time. You're doing an assumption and you're applying for new coverage with a company. So that applying for new coverage means that you have to have an application, payment, and all of those things go into deciding that effective date. So it's something where you want to call us and you want us to assist you through this process of placing a new policy that's a loan closing, but also renewal conversion and assumption, and so that we can get everything going correctly for you. And it's really important that we do that all before the closing.
Okay.
Yeah.
Great news. Thank you.
Yay, thanks.
More questions, Dawn?
So I think we're good. I think we're good.
We're good. And thank you, everyone, for such good questions. Okay, that sounds great. So if we weren't able to answer all of your questions, or just like me, I always think of my questions when I'm already past the point where I can ask them, you can certainly get in touch with Wright Flood. You can find the answers on bulletin board under the agent portal by checking your resources under the handout. You can contact the team, the customer service team at Wright Flood, the ops area, and you can chat online via live support when you're online. And also you can contact your regional sales manager, or you can call marketing and we'll be glad to talk you through it. So there are many ways that you can get some support on this topic at Wright Flood. On behalf of Dawn and Ashley and myself, we thank you for choosing Wright Flood for all your flood insurance needs.